You're fading pretty much from what I can see BHP, Rio and FMG. You don't think there's enough for the likes of a BHP and Rio in the way of, the push that they're trying to do in terms of diversification, BHP buying up Oz Minerals, Rio really banking on Oyu Tolgoi. Is there enough there to offset any kind of weakness on the iron ore side?
There is to an extent, yeah, definitely. Certainly more so than more of a pure play like Fortescue, which itself is trying to diversify into, I guess, hydrogen and the like. But we do see that's where demand is going forward. Lithium remains tight through that drive to EVs and batteries. And as you mentioned, copper as well. So it's pretty well supplied in the near term. But as you move out a couple of years and you get to the point where EVs start to really ramp up in terms of their adoption, it's not just the cars and all the copper that needs to go in there in terms of the electrification and motors, but the whole grid. More investment in terms of transmission storage across the grid means that copper looks very tight going forward. And it's obviously why BHP bought Oz Minerals, some good synergies there across Olympic Dam as well. But they are strategic areas. Unfortunately, there's not a lot of great options for pure play in the Australian market. Sandfire still sits there. It's a pure play copper play. South 32 has some copper as well as nickel and some other metals, aluminium that go into that EV transition. Rio's got aluminium as well. So that diversification will help them, but they make so much money out of iron ore that it's a bit hard to get away from a weaker iron ore price in terms of their overall earnings, particularly just in the short term.